What's up, everybody? Good morning, good afternoon, good night. We're doing an afternoon stream where I'm at. I'm in Atlanta. Where is everybody tuned in from right now? Let's see it in the chat. Let's everybody get active. If you're watching this later, throw your comment down below. We like to see how far reaching, where people are at, actually help you all as a community to connect with people in your local area as well. This is all about community. That's what this is about. My name is Kellam. Welcome to the show. That's all my information. Bing, 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 right there. We're going to be getting right into it today. We see Bitcoin is moving. I want you all to know, if you're watching this at any point in the future, it is August 8th, 2023. We are living in the future. This video is meant to be evergreen. We are going to be using price action right now and also looking in the past at how to set up healthy analysis and sort of order of operations so we can make sure we're stacking probabilities in our favor. And so we're not overlooking certain things and we're giving too much bias to a level or to a fib or to how do we stack all these things together so that we can make sure that we are making healthy analysis, basically setting up a strategy that we can really engage with the charts profitably over time. And there's nothing else I could say other than hit that like button, hit that subscribe button, ding the bell, get involved here, and let's dive right on into it. All right, so first things first, make sure you're giving me a follow right here. And I say this again, only because there's so many scam profiles out there for any of us out here putting content on the interwebs. Look for the blue check, look for the hit logo, and of course, my KELOY, KELLAM. You can also see it, was it right there, right next to my face. That's the proper spelling. It's the only spelling of my name. All my socials, that's what it is. Instagram, Twitter, everything. Now, in addition to that, make sure you're coming over here to, where is it at? I thought I shared. I guess I didn't share it. Did I not? Make sure that you're following the BitLab Academy page as well. Let's kind of come over right here at Academy BitLab. You can see I did another tweet this afternoon, going live in a bit, breaking down how to do effective TA so that you can stack probabilities in your favor. Make sure you're following BitLab Academy. It's right here. We finally hit 3,000. Awesome. It's wonderful to see. It's funny how far the YouTube page has grown. We got about 8,000, nearly 8,300 in the last 6 months. Far overshadowing what we're seeing on the Twitter here. So everybody get involved. Come follow us here. Now, what are we talking about today? Again, we are talking about how we can utilize the tools that are available to us so that we can help eliminate our bias and help eliminate the potential of us trading emotionally. What we want to do when we're trading, what we want to do when we're trying to add dollars, add value, essentially make our portfolios grow, is to understand when we're looking at charts that the price on a chart's irrelevant. Price is only a function of the sentiment of the moment of what people think, especially forward looking about where they think markets are going. The true intrinsic underlying value of an asset, you can gauge a lot more in depth looking at fundamentals, looking at adoption, looking at wallet addresses, looking at transaction fees, looking at fundamental developments and partnerships and all these other things that let you know, even when we're seeing drastic downturns in bear markets like we just had, how can you identify through all that noise, through the fear of seeing price drop, that this is a good asset, whether it's Bitcoin, whether it's Polygon, whether it's Ethereum, whether it's Pepe, it doesn't matter what asset it is. How can you identify that something is a good asset? And then beyond that, where do you take your shot? Where do you pull the trigger? So I want everybody in the chat right now, roll call to everybody that's here. Throw in a 1 in chat if you're grateful. If you're not feeling grateful today, you don't have to every day. But if you're alive, if you're here, and you just want to help engagement, which is a huge help on any YouTube channel, throw in your favorite emoji, throw in something, get involved. I want to see this chat flying here. We're going to dive right into what we want to talk about. So let's go ahead and jump here on the screen. We can see, I do want to shout out maybe a Band-Aid. Thank you for the $10 super chat. I appreciate you. I saw that you said you're sick also. Everybody's getting sick right now. Esposa, also, Mrs. Handcuffs, said you're not feeling too well right now. And I see my boy Nakudo. What's up? How you doing, my friend? I see everybody in the chat, all the regulars, the true OGs in here. I'm not going to call it all the names because I want to jump in right into all the data that we want to go over today. So what are we doing? Let's go over here. Let's look at the chart. Let's actually come right here and we're going to zoom in What we're going to do, actually, let's go ahead and delete a bunch of stuff, because what we want to do is I want to start with a naked chart and kind of show you an order of operations of some of the things that a good technical analyst, and good technical analyst is also a lot of times proven by their track record with their own portfolios, with their growth, with their sustainability in profits. They could take losses, but they're able to manage their risk in such a fashion that the losses they take do not outweigh the profits that they're making over time. You will take losses. Know that. If you're going to trade, if you're going to invest, you will take losses. How do you navigate those losses? How do you help stack the probabilities in your favor so that you can mitigate those losses as much as possible? Well, we're going to talk about just that today. We're also going to talk about what we're seeing today. If we come here, let's go to a very small time frame to make it feel really good. Double click on the side here and look at that. We've got a pump. We've got a Bitcoin pump. See this right here? Small little parabola coming up. We're going to talk about how even using this price action right now, and again, if you're watching this at any point in the future, you can apply all these tools, all these techniques, all these strategies, basically the process to any time frame on any asset. That's what this is all about. Bridging that gap from beginner to pro, no matter where you're at in your journey. We can all lean into humility and learn something, adjust our strategy, add new tools, take other tools away, or readjust how we're using those tools. So with that being said, let's go ahead and zoom in on this. We can see, first things first, we come to our chart. We have the 15-minute chart up. Doesn't matter the asset. In this case, we're looking at Bitcoin. Oh my God, this is going straight to the moon. It's going to break 100,000. Well, first step first, look over here on your chart. Well, we're way too small of a time frame to gauge any sort of meaningful data about, one, how sustainable this is, but especially in a midterm or a macro environment, meaning, I would say daily or above time frame. But what we can see on this small time frame, we are seeing that this is pushing up, and away. But how far up, and away is it going to go? First things first, anytime you're at a chart, I don't care what time frame you're on, zoom out. So as soon as I start zooming out, you can see, look, this is not even broken this high. This is not even considered a pump yet. We haven't broken the local range high. First step, always zoom out. Get the landscape of the asset that you're looking at. So we're looking at the 15-minute. Let's go up to the daily. Do you see a pump? I don't see a pump. Sometimes we're myopically focused on a small time frame because it makes us feel good about the asset that we're holding. We're like, yeah, it's pumping. It's up 0.25%. No, you got to understand the landscape of what's going on. In this case, and I've talked about it a lot these last few days, looking at everything on this chart, this looks like it's actually, the momentum is waning, as diminishing, that this momentum is starting to roll over. So what we're seeing right here, even on this local range we haven't broken, this would be the key point. Once we break this and we have volume and follow through, then we can say we're truly pumping. Will it take a bit of a pump to get there? Yes, but nothing matters on the bullish narrative until we break this level. So anytime you're looking at an asset and you're wondering, is it pumping? Is it going? Is this going to go up, and away from here? Zoom out. We look at this on even a larger time frame. Let's go on the weekly. You can't even see. I mean, you could see a little bit of a blip here, but it's nothing in the scheme of things. Get your context by looking at more data. So now, if this is the case, let's go ahead and delete the arrow. I just want to also notice here on the weekly, look at this momentum wave to the upside, which is aligned perfectly with this right here. See? Now look at this. Barely a higher high. I'm talking barely. Regionally, it's a double top. Looking down here on the momentum, how much strength did it take to get there? Boom. Now we got a higher high. Look, there's a lot less strength behind it. AKA, if it took, there's a lot less fuel to get to this point, which means even though this got a higher high here, how healthy was that? How much of this was liquidations, AKA force buying or force selling by price getting pushed beyond a certain threshold, especially with derivatives and perpetual futures and margin and leverage and all this stuff in the market. This doesn't have the underlying strength. It looks like strength is diminishing over time while the price went higher. This is indicating that there's probably not much fuel here maybe they need to go back to the pump. Is the pump going to be down here? Is the pump going to be here? Is the pump going to really scare us, get down here in the low 20s? You see what I mean? You want to zoom out and also understand not just the price action, not just the price on the chart, but also the underlying data and metrics that you can glean from using a variety of different tools, whether you're using the BitLab Trend Fuel, which is this down here, whether you're using the BitLab Intelligence, which is this right here, whether you're coming over here to MACD, RSI, Stochastics, Money Flow. Well, look at that, Money Flow. A lot of water for the plants to grow. Oh my God, it's a drought. What happens in a drought with plants? They either start to die, they start to shrivel, or there's not the necessary materials and elements that they need to continue being healthy and growing upward. Water coming out. This is waning. Momentum large, momentum smaller, momentum even smaller. Money flow is also coming out. You see what I'm getting at here? So we want to always remind yourself, if everything looks really exciting on a chart, man, price is really moving. Ask yourself, are you on a 5-minute chart? Are you on a 10-minute chart? Are you even on an hour chart? Go up to the daily, go up to the 3-day, go up to the weekly, even go up to the monthly sometimes, so you can get a broader view of what's going on in the chart. So now we understand price action. We see the momentum has been waning to the upside. We understand the technicals have suggested we see this upward trend with the MACD getting sharper right here. This is about right in here. And the slower moving average line, the red line here on the MACD, starts moving to the upside. We see this. The angle starts going even faster to the upside. Momentum coming into the market. Now it starts to leveling out here. Look, it's leveling out sideways here. We see lower highs here on the stochastic. We see lower highs here on the RSI. We see the money flow coming out. So all the underlying metrics, as much as we want this to go up, because 2019, in this case, we're looking at August 8th, 2023. When we're comparing this to this pump in 2019, where we had the lows, where are we at? Right here. We had the lows down here at the $3,100, the highs up here at $13,000, basically $14,000, $13,990. It's a pretty big move. We want that move because I talked about this earlier, but I'm going to bring it up again. If we look at this from the high to the low, this price action went all the way up into the golden pocket. And everybody wants to look at a fractal of what's going on with, let me go ahead and quit iTunes. Everybody wants to look at a fractal of what's going on from previous price action and say it's going to do that this time. It's never going to do exactly what a fractal has done before. A fractal is when you're looking at price action in a period of time, how it responded, what certain data metrics did it hit, and we hope that it's going to repeat. Typically, especially, we see it a lot with bullish metrics. We're like, this is what happened before, this is what's going to happen now. Well, that's not really the case right here, because if we look right here, we take this Option F. If you're on PC, it's Alt F. We go just like that. Golden pocket's way up here, up above $48,000, $48,600 to $50,000. That's the golden pocket. But look at this rolling over right here. Does this mean we will never reach the golden pocket? Absolutely, it does not mean that. What it means is right now, the strength required for us to, just trade on hope for it to get there is probably ill-founded, and will probably put you in a position where you're either going to have to hold. For instance, if you bought at the very top of this wick and it's coming down, I wouldn't necessarily suggest selling because of that. You already missed that move. We know over a period of time, looking at Bitcoin as it relates to the halving schedule, the 4-year cycle, liquidity, global liquidity cycle, the ETFs coming here in the coming months, likely coming, I should say, right about, it's likely going to happen. If it does happen, if we get approvals, they're not all just delayed and then eventually denied. If we do get the ETF, it's lined up to be somewhere around February or March or something like that. February or March, I think. And that's just preceding the halving. So understanding the cycles, the macro cycle with what Bitcoin has done historically, understanding where we're at now and remembering that this is not the only previous cycle where we came up to the golden pocket. Yes, but when we go back and we look a little further back, we can look right here. We go from this top Option F to this to the bottom here. See, I've dragged this line right to the bottom. We can see that it took all the way. Let's see what the time is. So what we're doing right now is we're looking at historical analysis. We're looking at previous price action, what it's done in previous cycles, and we're going to look at not one cycle, but a minimum of 2 cycles, and figure out what the interaction of price was, what types of levels it hit in terms of Fibonacci, what types of what the volume was doing, what the interactivity of the different data metrics, and then we can correlate those correlate and compare those 2 different cycles, see where we're at today, and then draw a deeper conclusion about where we think price action is going. So if we take a time measurement from the top here all the way to when we hit the golden pocket, that's 938 days. Okay. If we come over here, let's look at it where it was here. This was 567 days. So both of them hit the golden pocket. One was very quick, pre-halving. One was much slower, post-halving. So you see what I'm talking about. We want to let me just make sure that's correct. The halving, maybe right about the same time as a halving. So yeah, look at this. It was just barely preceding the halving. Look how far in front of the halving this one was. So they both got to the golden pocket, but one was much quicker, one was much slower. So if we want to compare fractals, you can't just say, I like this fractal, it makes me feel very good because it means the price action is going to go straight up. Well, that's not how the damn market works. You got to look at a variety of data sets and sort of compare and contrast them. And typically, it's usually going to be an average or a mean between those different data sets on different cycles to really get a better sort of understanding of what price action is likely to do. So where we're at today, let's look at this. I'm going to do it from this top here because we can do both, but let's do it from this $64,000 top. Most analysts I talked to, although this was higher, this was somewhat manipulated by the fact that we had mass inflation already kicking in right here. But we also had a weird dynamic with this sort of getting cut down here because of the Chinese mining ban. But let's measure it from here. There's, man, that's 800 days. So this is already, long, 900 days would be into here. This is when in the 2015 cycle, around when the golden pocket was hit. So in this case, we're still well on target, but it doesn't mean we're going to go straight up there. It looks like based on the analysis, and we'll do more of that technical analysis, that it looks like there's likely going to be some sort of pullback. If we do the top from here, the $69,000 top, then this puts us, if we do the 500 and something days, the golden pocket would have been, we would have hit somewhere right in this zone here, 565, 570, and we got nowhere close to that. If we look over, again, the 900 days, that would put us way over here into June of 2024. I believe very strongly that we will hit the golden pocket before this metric. When we're looking at the 2 different measurements, the 2015 and the 2017 to 2019, those 2 different cycle periods from top to golden pocket hit. So now that we see there's two different price action landscapes and how it played out and the correlation between time and where things are on markets and data sets and all this sort of stuff. When we're looking at these 2 different options, we can also look to right now, looking directly at the price action. Let's come back over to the BitLab trading stack. Looking directly at the price action here, we can see that the golden pocket's way up here. It doesn't look at, there's not a structure right now that's set up to say this is likely where we're going. Could it happen? Absolutely. We've seen weirder things. But what I want you to pay attention to is this shape right here. Look at this shape right here, and I want you to look right here. Look at this shape right here. Push up, smaller push up, lower low, lower high, down. Now looking exactly where we just were right now, zoom out, push up, smaller push up, smaller push up. Are we going to get a lower low and then a lower high? Excuse me. So this way, we're not only looking at cycles and how price action has moved in similar sort of structures over time, we're looking at also the time that it's taken to do certain things, but we're also looking at the patterns formed on the chart. In this case, we haven't even broken out actual candle patterns yet. We're looking at just the structure of the price action over time. In this case, over here, we see a rounding top down, which was just a correction, and then a continuation up. this case right here, we're having that rounding happen. In addition to the rounding, we can also see the technical data. Momentum is showing a large bearish divergence. We also see this 2 right here. We have 2 bearish divergences right here. Money flow bearish divergence, on balance volume bearish divergence, right here at this center candle, which is essentially the top of this move. In addition to that, you come up, got a little fake out now below this 20 moving average, bounce right back above it, a little bit of a fake out. We had no follow through, and then the price action came back down below it. So the question I have for you, when you see this, we have this white candle. This means moon up, up and away. Well, first off, have we overtaken, have we gotten back above the 20 moving average, which is this slightly darker line that we can see? Or do we still have a potential to reject off of it? Which would not only be a rejection, let's kind of zoom out here. I want to show you something, which would not only be a rejection, this would be right here, option J. Then we can also come up here to the top of this level, option F, alt F. Again, if anytime I say option, I'm on Mac. If you're on PC, just do alt. We can see right here, this is this full move from top to bottom. There's nothing bullish about this, even if we overtake this level, if we haven't taken 30,500, 30,600. This is a golden pocket of this move. This would be a hell of a bull trap for this to get up here and say, oh, yeah, we're doing it. We're doing it. Well, if we couldn't get over this hump, over $32,000, whatever level on any asset you're looking at, when you have some major news impulse, positive sentiment explosion, in this case, the biggest week in the history of crypto, BlackRock ETF, and then over here was, I think this candle was about where the XRP positive summary judgment was. Neither one of those could take us over $32,000. So if we come up right here, what's the narrative that's supporting us through? There isn't one right now. It doesn't mean there can't be. And remember, anytime you're doing analysis, you have to be able to pivot in a moment's notice because sentiment can change. I mean, we see this. This was scary, 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 scary. Best news in history. So this could happen. But as it stands, if we're removing the prospect of something maybe happening, because we don't trade on maybes. You do not profit in investing and trading on maybes. 1 in 100. You cannot plan on 1 in 100. There's no probabilities with 1 in 100. In this case, we're still below this zone. We're still below this wick right here. We haven't even gotten to the 0.5 right now. We very well could be rejecting right here in this region of the 382 from this move. You see what I'm saying? So now that we've looked at the price action, what we can also do then is now, what is the underlying support for any price action? All these other technical data, when we're looking at momentum, when we're looking at strength, a lot of these things incorporate the technical data from volume. And you should always incorporate volume. Volume is one of the most important technical indicators that you can utilize. Everybody thinks indicators is BitLab Trading Stack or Market Cipher or Lux Algo or RSI. No, an indicator is anything that provides you technical data to give you more data about price action movement over time. What are all the different technical, the composition of all the candles in the move? So this candle did this. What is the volume that made it do that? Well, we can see right here, there was a pretty large volume spike here, but then from this move right here, from this candle all the way over, what do we see here? Option T, come down like this. These are declining amounts of volume coming up into this move, even though we did sell off and we had that massive sort of felt like a God candle at the time. We didn't get over 32,000, but we can also see, not even looking at momentum, RSI, stochastics, MACD, BitLab, Trend Fuel, looking only at the price action, not being able to get over this level, as well as the volume says, oh, this is why you didn't have the interest to get it there. So analysis is about utilizing the tools that are available to you. Utilize them. Don't buy because you see this green. In your case, it'd probably be a green candle. I have mine set as white and gray. White is basically a bullish candle. When you see a bullish candle, don't jump in because you don't want to miss the move. Oh, it's starting to move. I got to get it. No, don't. You're going to be donating your money to other people when you do that. In this case, we haven't broken any structure. We haven't even broken past the lows of the previous, this sort of previous range right here. See this? We're not moving through this yet. Let's come down to the 1 hour to get a little bit more clarity. Okay, where are we at? So this is the move that we came up to right here. Look at this. See the dotted line that comes across right here? This is the price action level that we're at right here. And if we zoom in here, you see the dotted line? Look at this. This is right on the base of where all these levels bounced at. This is basically this consolidation period, which now looking at this, because price came down, this was a distribution area. Low areas are accumulation, high areas are distribution. People accumulate into downward price action, people distribute. So this is every time they're getting the price to go up, to get people to buy, to give liquidity up here. So smart money and institutional money can take advantage of this liquidity to take higher position shorts or to exit at a higher level from their longs. We see this rinse and repeat over and over and over and over. And each time this is not able to get through this zone, especially with all the positive news it had, the bulls start to lose hope. They start to lose steam. They're like, man, I got to go sit. I got to go take a break, man. My ankles are tired. I can't get through this wall. And then what do we have happen? Then the price action loses this level. And then we've basically formed a downtrend. We finally got that lower low. You see what I always say? Once you get a lower low, look for if you have a lower high. Lower low, lower high. And then boom, we've had a sort of downtrend, slight consolidation. As it stands right now, we have not broken past this level. We're still, if this were to reverse right here, we still would be getting a lower high right here. Now there's something to look at right now. Will this continue higher? Well, let's actually come to the 4 hour. 4 hour shows we're getting some choppiness in volume here. See the volume across right here? Also on the 4 hour, BitLab Trend Fuel, you see the momentum was arcing up like this, and it's starting to come up. But we can see, if we zoom in right here on the stochastics and the RSI, they're coming up into very overheated territory. I want to see, they could stay up there for some time, but I want to kind of see what's going on. Now look at this indicator sort of control panel right here. It just gives you a quick green, silver, gray, or red indication of if that indicator set, and in this case, the VWAP, a stochastic line, the RSI, the trend wave 2, and the stochastic top to bottom. And you can see in this case, 1, 2, 3, 4 of these are in green or dark green, which is actually showing quite a bullish setup. So let's come down. Let's go to the daily. Daily, this is getting a little bit mixed, but look at the split here on the daily. The RSI way up, but look at this. If we do option J here, this is a previous high. If RSI cannot overcome this line, I'm not even looking at price action. If the RSI, if the underlying strength, while price action is going up, if this gets rejected at this level, this is indicating me that this is a little bit of a bull trap, and it will likely come down. So you see what I'm talking about. Now coming down to the 2 hour. Okay, look at that nice arc here on the momentum. This is suggesting we might have a move. And this, was about, let's say like right there. Now look at that. Right in the middle of this move, right before this breakout. This is before it's crossed over. On the 4 hour, this crossover was on the momentum, the crossover was about right there. And this would have, this is not using any of the other indicators. But we are seeing, I do like seeing this. Look at the volume, sharp uptick in volume on the 4 hour. We can see the high volume also in this candle. This candle is teal because it's suggesting there's a lot of underlying value coming up. I want to watch out for one of these yellow candles right here. The yellow candles is essentially almost an evaporation of volume. It's like stopping volume. It's an indication that this move is probably exhausted and it's going to come down. And not only do we get this yellow candle, we also got this bearish signal right here. It's almost, I don't want to call it a buy sell signal, but these, look at this this green bullish signal, perfect opportunity here to take this long. And basically you can exit the long right here where you get this trend shift. And over here, we have a bearish signal that happened right back here on this previous high on the top of the wick. We currently have not been able to get up there. Let's get down to the 30 minutes. Let's see what's going up. What's going on here? So these are about parity. Where were we looking? So we're going to go option T from the top of this. Currently, there's a slight deviation, meaning This one currently is a little bit lower. However, this does look like it may continue. This may roll over right into the zone. And it does look like it's slightly angled down, which is almost a non-signal. But we can also see that this is a little higher. This is a little lower. So look at this. On the 24 minutes, we got two bearish signals coming in. On the 24 minutes, we did get the stopping candle right here. Look at this. And we got the dip. Found support on this 50 moving average right here. This is great. Great trading signals right here, especially with the price action. Look at this. Buy, sell, coming basically consolidated across, lost the 50 line. And then once it broke back above this 50 line, that was essentially a go signal. And this moved up until we got stopping volume, came back down and moved up. We're getting stopping volume and two bearish signals right here. This is going to be interesting to see what happens here. We've got a slight increase in volume. Slight increase in volume. But on this next candle, we've got 5 minutes left. We're on the 24-minute chart. And look at this. Currently, look at the evaporation of volume so far. We only have 5 minutes left. Unless we get a huge amount of volume in this last 5 minutes of this 24-minute candle, this lack of volume on this move, this parabolic move that is formed, is suggesting we're right at this level. This would be the top of that range. Let's see how close we are. We still have a room to go. Maybe we get a little quick wick up to then get rejected down. I'm not saying the price action absolutely has to go down, but being that we are in a sort of midterm, short-term downtrend, we can look at this on the 2 hour. Look at this downtrend. And right now, price cannot get beyond the lows here and the high and above the high here. This is looking like utilizing volume, utilizing price structure, utilizing candle patterns. So let's go ahead and talk about this candle patterns. And I've done a number of these. I've drawn this out for you guys a number of times, but we're going to do it again just so we can make sure everybody's seeing what I'm seeing. Now I'm going to go ahead and delete. There we go. I'm going to mute there we go. So what I want first to do, option T, come from this zone right here, touching this right here. Cool. That's, we get a trend line from there. Now we can extend this out. So extending this out, we can see that we had, yes, a deviation above, but rejection, 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 rejection. So that's clear. Now we've got this line right here, which is all this bounce, 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 bounce. So let's go ahead and draw a box right here because there's going to be a little bit of a zone and we can adjust this. You don't have to get it right the second you put it on the chart. Just draw any square on the chart and then you can adjust it. Now we can drag this across here and we can see, there we go. Now you see this bounces on the top, bounces on the bottom, bounces right in the middle, bounces on the top, bounces on the bottom, bounces on the bottom. And then this dragged out across gives us a zone right here where the price action traded in. And it makes sense looking at all these different bounces. And we come over into this zone. And what do we see in this zone? We see rejection on the bottom, rejection on the top. I didn't draw this based on what's happening here. I drew this based on previous price action. And this gave us a clear zone of where price action would interact with. And then now we also see over here, this sort of traded on the top side of the zone and is now got rejected for the current time being, and price action is traveling to the downside. So now let's get some more trend lines. So now let's do option T. If you're on PC, it's alt T. We're going to draw from this point to this point. Cool. Now we have a trend line. Now let's see, does this go any further? Boom. So from this point to this point to this point, look at that clear zone. Now, if we zoom in on this, we can see that we've come very, very close, and this is not quite there yet. You see how this is kind of deviating to the downside. I'm going to kind of move that just a touch. There we go. So now we have two trend lines, and I'm going to do one more trend line. I'm going to do one more trend line, and that is option T. I'm going to do it from this point to this point. Where was it at? Yeah, there it is. Now what I'm going to do is I'm going to make this one red. Actually, I'll make it gray. There we go. Do red. There, so we can see we have two rising wedges. We already talked about the rounding, rolling over nature. We talked about the lack of momentum coming to the upside. We can also see the fact that this is getting rejected at multiple levels. We have two different rising wedges. Rising wedges tend to break out to the downside. And so now we're stacking the probabilities in our favor. You don't just create a pattern and look for the breakout based only on that pattern. Look at all the data. Look at the volume. Look at the relative strength index. Look at the stochastics. Look at momentum. Look at money flow. And stack all these things up in order and double check them against each other. Now, do I think that this very well is going to absolutely break down? Not necessarily, because this very well could also bounce here, kind of front around the support here, but it could bounce right here where it's at and come all the way back up into this zone and get rejected again and come back down and then lose it, or come up here and completely shoot to the moon. But what we want to do is stack the probabilities into what direction we think this is going to go. We know everything that's going on in the economy right now today, August 8th, 2023, but in the future, the monetary policy, global economy, all these different, what's going on with traditional, the traditional markets, NASDAQ, Dow Jones, all these sorts of things. And in fact, if we come over here and we pull up NASDAQ and Dow Jones and SPY and all, S&P 500, all these things, come over here to traditional markets. We can see NASDAQ on the daily is trending down. We see that Dow Jones, we have all of a sudden the lower low, and then we got the lower high. It's crazy how this first lower low can give you an idea what may be happening. Also, in addition to this rolling over, letting us know that that was likely going to happen in the first place. Rolling over, then we get the lower low and then the lower high. See what I mean? So if traditional markets sort of risk narrative is starting to evaporate from risk to safety, aka price coming down, then we also see in the SPY, S&P 500, same thing, rolling over, and then we get the lower low, and again, lower low, lower high. You see these things are suggesting the risk narrative for Bitcoin may start to come into question. So if we have two rising wedges, both these rising wedges, whichever one you want to utilize, if you only use one or the other, I like to kind of get multiple different ideas of where price action could be having interaction. But both of these being a rising wedge tend to break to the downside. Okay. Not only do they tend to break to the downside, we also see other risk identifiers suggesting risk is coming out of the market. And we know this is a highly contested zone that may need to kind of tap on this a few times. Now, the last thing I want to show you, I talked about it in this morning stream, but an indicator I don't use super often, but sometimes I like to look at things in new ways and really gauge an understanding for what's going on with different types of indicators. There's impulse 1, pullback 2, impulse 3, pullback 4, and then 5. Elliott waves tend to go in waves of 5, up, down, up, down, up. So this would suggest that we've already hit our local top. In this case, typically what you have after this setup is an ABC correction. And that would be the correction, which is this right here, down, a move up. And this is the important part for the technical analysis, especially if you're looking at this today, August 8th. You have to pay attention that the A wave down has a corrective or a relief wave up that could, get somewhere in the zone. But the point is, by classical standards of how price action operates, things don't just go up or just go down. So while you may feel like we're having a pump, when you zoom out and you use multiple different indicators and different types, not only one, but different types of technical analysis, you can see that the ABC corrective waves suggest that there should be some sort of pump here, some kind of pump. And in reality, if the analysis goes the way that I'm doing it today, the pump to me looks like it's more likely than not going to be a bull trap sort of fake out relief rally. Why? Because people are going to be buying this, hoping they catch it before it breaks 32 and they have the best returns. But in reality, what I see is happening is this getting rejected somewhere in this region. Why in this region? Because if we zoom out, let me minimize this. If we zoom out, see where price action is right now. It's coming into this zone. See this price action zone? All this price, boom, 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 boom. It's coming into this zone right here. The B corrective wave may be just like this and then coming down. It may chop in this zone, have a small little pullback, and then continue up into this zone, all of this trading area. Either way, there's some relief to be had, and how much is going to be there. And then what is your analysis? Do you believe that we're going to have a corrective wave down? Or do you believe that this was the local bottom of this impulse to the downside and we're actually going to push up and we're going to break through 32,000? Because I don't need to be right. You need to trade with your own strategy, with your own skills, with your own everything you're learning, whether it be from me, Frankie Candles, or CryptoFace, or Crypto Capital Venture, or Crypto Jeb, or TA Tim, you know, Tom Crown, Kevin Svensson. But what I'm seeing with the evaporation of risk narrative, liquidity not really coming back into markets, and the biggest news story in history not breaking through a certain level, seems like it's more likely than not to play into that narrative of what? Rising wedges indicate a likely breakout to the downside to come. So that's what I'm seeing. And I do that. Again, if you're watching this any point in the future, utilize a variety of different tools, TA, indicators, volume. If you see price action pushing up to a certain key level and volume starting to evaporate, that's telling you that there's interest is diminishing into that zone. If you think something's going to break out at a zone, or you want it to, or you're hoping it does, what signal do I look for? Then what we do is we kind of come into a zone. Let me see if I can find. See right here, price action comes down, it's consolidating sideways. What do we see? As it's consolidating sideways, we see volume increasing. There's a bullish divergence on volume compared to what price is doing. Right there, see price is going sideways and volume is increasing at this level, showing a lot of interest coming into this zone. And then we can look down here to the bottom, the momentum wave starting to curve up. We see the RSI starting to move up. We see the stochastic starting to move up, front running the price action actually happening. This is why when you see price action moving up and you see the stochastics angling to the downside or RSI starting to move lower while price is still moving higher, it's giving you an indication that the move is not probably going to be a healthy one it's not going to have that continuation that you're looking for. In this case, let's see where we're at right now. We do see an increase in volume in parity with this coming to this level. Good. We are on the 8 hour. Let's come down to the 4 hour. Increase in volume. We do see the momentum has crossed over and come up now green. And we also have not only, you see how this is green, you see how these can be, the momentum waves can be gray, red, or green. The green, especially when it's on the positive side, means it's not only positive, but also has high volume, in which we can see the volume right here. So you can kind of, you know, not even have this volume thing on and see that the volume has increased because these are no longer gray down here where I'm showing. These have turned green, suggesting that the move here is carrying a lot of volume, AKA interest. But we're getting the volume, and currently we do see expanse, slowdown, expanse. This is actually even bigger than this candle. But on this candle, we have 16 minutes left. We're on a 4 hour. So on this candle, if we're not able to take out this level on this candle, then I expect what will happen next is we'll get a little bit of a flag. You know, very bullish people will be like, it's a bull flag. It's going to go up from here, which it could. But because this is not taking this out, and it's actually, you know, the top of this is about right here on this candle. So this wick goes quite a bit higher. This is starting to lose. And look at this. Expansion in volume. Not much expansion in volume. Let's come down to the 1 hour. Now we get more resolution. Smaller time frame. Smaller time frame shows us coming into this move. What do we have? Expansion of momentum. Candles getting larger. The candles are telling a story individually in addition to all these other, you know, advanced technical indicators you can use. If you're not looking at the price action, if you're looking at the daily and go, yep, this is absolutely going to go up from here. Look at the daily. Okay, what's the resolution on this? Here's the daily. Let's go down to the 4 hour. Okay, here's today. Boom, these candles right here. A lot of different, this looks a lot different than that one big green candle, that one big white candle, right? Let's get down to the 1 hour. Okay, here's the move broken up into 1 hour segments. This shows the move was still moving up, but what do you see? Slight expansion and upward velocity, meaning how quick it's moving, price actions going up. Now we get a bigger expansion. See, this is moving up. The candle's larger. You have 3 green candles, and they're consecutively getting larger in size, that means that there is an increase in momentum, an increase in velocity with price going up. Now, this is great. This is exciting. But then all of a sudden we get, look at this, much smaller candle. If we actually zoom in on this, you can see that's a spinning top. Spinning top indicates there's a little bit of a, this is very bullish because this is expanding. And then we have a spinning top, meaning you have about a small body with a wick, equal size wick on both sides, showing that all of a sudden the narrative between the bulls and the bears is equal. So this is the expansion. Uh-oh, it's getting neutral. Still bullish, but, you know, small candle again, smaller candle again. We have 14 minutes left on this. And we can see, what would you say? Would you say this is increasing in volatility to the upside, or would you say that this is starting to roll over? Meaning, do you think, does this right here look like this? Sorry, like this? Or does it look like this? This looks like it's starting to roll over. It's starting to roll over, and we did not even take out this high. Therefore, another lower high. So we need to pay attention to that. So I hope you all can see, as I'm breaking down the chart, I go from larger time frame and get better resolution on what's happening with each smaller time frame. The larger time frame gives me a good narrative about broadly where the narrative of momentum or the bullish and bearish sort of battle is and how far along we are on that. And then each consecutive time that I get, basically get higher resolution on, aka weekly, 3-day, daily, 12-hour, 4-hour, 1 hour, 15 minutes. Each consecutive way you go down, you get better resolution about what price action is likely to do next in the smallest time frame. I hope you all can understand what I'm saying here. Now we also see the momentum is starting to roll over. Is it starting to roll over? It's still slightly expanding. Let's get down to the 24-minute. Okay, 13 minutes left. Now look at this, chopping sideways. Lost momentum. Look at this. We got the, let me go ahead and delete this line so we can see. Look at this. We got the stochastics angle down, which is the orange line here. We have the RSI got rejected. Boom, boom. We have the RSI is also angled down. I don't know if you can see it within this. Something in my teeth. And we see the momentum starting to wane, and it's actually got to a point to where now it's actually, this arrow is suggesting this is likely going to roll over, excuse me, back to the downside. So multiple different indicators suggesting that this move, as it stands right now, if I had to bet probabilistically, that this will likely have some sort of pullback. Does this mean that it doesn't? Does this mean that the pullback means that this is a failed move? No. And we might get something like this. You see this boom, boom, this small move right here. This might consolidate, have a small pullback, and then continue up. But this is looking at the 24-minute time frame. When we're looking over here, but again, at the, I'm going to go ahead and delete this because this is just taking up too much of the screen. Sorry, orange. But looking at this as it is, even if this were to pull up and you push up in this zone, we have these two giant order block. What do I mean by order blocks? These red boxes right here and right here. See these? This is from the BitLab volume. It's letting you know where there's kind of like a liquidity magnet for where price action may likely come to. And look at this. This liquidity magnet is a bit of resistance. So if this were to come back up into here, this is suggesting the chart was setting this up all along for the price action to come up into this zone and trap people. Do you want to be trapped? That's my question. Now, will you miss some of the move if the price action comes up into the zone and actually takes it out, comes all the way up into here? Maybe. Will it continue on? Maybe. But as it stands, even if price action came up into the zone, look at these two fairly large, medium time frame, all the way back to around November and December. We can see these two. I got something in my teeth. We can see these two trend lines directly above the zone. So if price action were to come up, price action, God damn it. Chick-fil-A stuck in my teeth. Nobody told me. If price action were to come up into the zone, maybe get a small rejection and come up in here. This doesn't mean we're free and clear. We have this to contend with and this to contend with. This would be a massive trap if it got up to this zone, only to come back down. And make no mind, when you come over here to the rational, let me kind of see where this chart is. So here's the halving right here. Last cycle, when it went from 3,000 something up to $14,000. This is the 2015 cycle when it kind of chopped all the way to getting the golden pocket here, golden pocket here, golden pocket here. You see the difference? How far away from the halving this one is, how close to it is here. But either way, we had a lot of work to do of both massive up, massive down. This the 2015 cycle moved up about 100-something%, dropped about 60%, moved up about 100%, dropped about 45%. So there was a lot of work to be done. I think we're going to get a little bit of a combination between the two, and we can see that by the price action being directly between these two levels. Okay? So now, where we're at now, for me, makes most sense for us to come back and tap some of the liquidity below where we're at. Oops. Meaning coming down, coming down here, and who knows what the level is going to be. It may be right here around the $25,000 region, which we know option H right there. This is two previous top rejections, and this bounced on this almost perfectly right here. Will this come down, front run this, and bounce above it and create a new higher low? Or will this actually recognize that there's going to be a ton of liquidity, meaning orders on the books, limit orders on the books, derivatives that have liquidation points. Once this gets down to this level, we're going to start seeing, especially if we lose this level, we're going to see an astronomical amount of people putting shorts in because people will be scared. What will happen? The price will drop a little bit further, most likely. This is what I see happening if we do lose this level. Price comes down, and what will happen is that will end up being the most ultimate trampoline springboard ever because institutions are now trying to make sure that they're prepared and they can keep up with what BlackRock's doing. And there's other ETFs and there's other, all this stuff is coming together in such a beautiful way. So if we do lose this level, for me, it's one of the most bullish things that we could have, that we could see, because that means as the further down the price goes below this level, the more liquidity and the faster the spring, the stronger the spring is going to be to launch us. Because once we get all those shorts in there, all these people are like, oh my God, I knew this was going to fail. Once we get those shorts, then that means institutional buyers and you and I, those of us that know what's going on in the market, we could take advantage of that, identify a level based on what's happening with the price action when it's there, based on the volume, based on the structure of the candles, based on the pattern that is present that gives us an indication of where the breakout and reversal points may be. All these things combined can give us that opportunity to take advantage of when the price action gets pushed above the liquidation point for those shorts, only to then create a massive short squeeze to get one of these types of moves right here. So we come down like this, and then we push up into this zone, pull back, and then completely rock it off. And I've talked about this before a lot on the stream, and that is looking something like this, looking something like this chart that I pointed out in January of this year. Something where we get this push up, rejection, push up. In this case, I was saying we had an opportunity to potentially get up to this golden pocket. This is not what we got. But you can look at the same structure. Imagine this peak being right here and having this dip coming back into that $25,000 sort of range or below, 23,000, 25,000. So that's what we want to see. That's what we want to feel. Now, how's everybody doing? How you feeling? Let's go ahead and look at a couple other charts. Let's look at Ethereum. We can do a little simple breakdown on Ethereum as well. Let's kind of come right here. We're going to go right this, remove drawings. Now we're going to turn off the indicators really quick. Same thing. Let's get a basic TA rundown of what's going on here. Let's go through the methods. Okay, let's turn off the BitLab volume. Okay, what do we got? Looks like a stair step almost. Is this going to have another leg down? I don't know. Let's see what the TA says. From the bottom, there's your support right there. Option T. Looks like we have a bit of a something. See these bounce, 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 sort of pain point right here, rejection, rejection. Now in this case, lower low, actually this is a higher low in this position right here, but from this most recent move, we see this lower that comes down, finds support on this low. Now we have a lower high with a sort of triple top in here. See, boom, 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 this little arc. We come down here, I'm on the 3-day. This is what I was talking about right here. Boom, boom, boom. We're coming down, we're finding support. The momentum right now on the daily suggests that this is starting to have a setup to where it's going to try and come to the upside. Now, looking at the money flow, we can also see it's trying to arc up, but this has also been very choppy with the money flow. We want to see this actually starting to come towards this zero line right here. Currently, it's still a negative money flow. Momentum is angled to the downside. It's starting to converge back. It's starting very lightly to converge back towards the zero line, but will it? This same thing happened here, and it only expanded further down. So as it stands right now, look at this. Higher high, higher low, higher low. Look at this. Low, lower low. So this is a bit of a hidden bullish divergence. But let's go down to the 4-hour. What's going on with the volume? Very choppy volume, not a clear story. Very choppy volume. We are getting a little bit of a move here, but as it stands right now, this move is only pushing up into the lows of this previous consolidation range. It's pushing up to a point to be consolidated. We have 3 minutes left on this 4-hour candle, and it can't break through the lows of this range. So what does this tell you? Let's turn on BitLab Intelligence. I'm actually going to double click here. Let me actually go like this. Boom. There we go. So can't get through those lows. It's fighting right at the point of control, which is this big teal line that comes out, which point of control means at what price level has the most volume traded and transacted. It's right on this teal line right here. We could tell because that's where a lot of the consolidation was. This candle pushing up, there's expansion of bullishness, but now look at this. Wick means the bears are eating this back down. It's fighting it down. This can't follow through even to break past this high. Even to break past, it tried to. See this over here? It broke past these lows, but the bears ate it right back up to be held suppressed below these lows right here. So it looks like there's an attempt, but it doesn't look strong for follow through yet. Could it? We do see, look at this arc right here. Boom, boom. We have some bullish divergence. This actually looks a bit better than what we were seeing on Bitcoin. Bullish divergence, low, higher low, low, lower low. So the momentum is starting to eke up. We can also see this angle right here is coming right up towards the zero line. Looks like the stochastics and the RSI are getting very high though. And this also, the story is kind of supported here with this, the bear is eating up almost half this wick. It's gonna be interesting to see what the next candle does. And also the close of the day. But we can see that there's sort of a discrepancy as to what the narrative is for the bulls and the bears on this price action. We can even do a smaller time frame trend line right here. Like this, we have rejection, 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 rejection. We did break out, so this is looking a little more bullish. But how much of this is healthy buying and how much of this is bots that were just past a certain, coming into this level and basically causing this breakout? I want to see what the follow through in this is. Because to me, this is looking like it's more likely to be a trap. And even if we were to come up into this zone, look at this, option F from the top all the way to the bottom. Golden pockets all the way up here, which is also these highs. Golden pockets all the way up here at 1944. We're down here almost $100 lower, which is 5% below the golden pocket. We didn't even make it up to the 382, which is right here. If this cannot break these highs, then this is not looking like it's going to be a rally with follow through. So that's what I'm seeing. That's what I'm feeling. Let me go ahead, head over to the chat again. If you're watching any of this at future time. I just want you to go through multiple different steps, multiple different types of technical analysis, looking at the candles individually. What narrative are they telling you about the bullish or bearish narrative at the time? Who's in charge? Is it expanding bullish? Is it expanding bearish? What's the chart formation? Are they head and shoulders, inverse head and shoulders, cup and handle, inverse cup and handle, double top, double bottom, AKA an M or a double W pattern? Is it a rising wedge? Is it a bull flag? Is it a bear flag? Look at all these things in combination, because you may have a bear flag coming down into a rising level of support, which indicates two stories at the same time. There's a potential for a bearish breakdown, but you're also at support of a major trend line. So sometimes you have to take a chance based on the other things you're looking at, also the larger market cycle that you may be in, and trade using your probabilities. Take your shot, but use your risk management. So that's what I'm seeing. That's what I'm feeling. I love you all. Aloha, Brad Kellam. How you doing, Mr. Silky? A bit late today. Just happened to log in. What's up? We're just about to wrap it out. I was doing an hour today. I love you all. I appreciate you all. I've got some other things I got to do. I do want to say, head over to my Twitter page right here. I've got I'm going to be a guest on Twitter Spaces later this evening with Gareth Soloway and The Real Plan C. It's right here on my page. Weekly global economic data, blood in the charts, tension rising. Join Invest Answered Spaces tonight. We got Gareth Soloway, Greg Dickerson, David Lynn, The Real Plan C, Ryan Rosbiani. We're going to be on at 7 p.m. this evening. But with that, I love you all. Make sure you're checking out bitlabacademy.com. Get involved. Join us here. Get involved in the community. Get involved in the Discord. I was trying to post some charts earlier, and for whatever reason, I just sent Ray a message. I was unable to post, but I'm going to be posting a lot more charts for members there, so you guys can see setups I'm looking at, some warnings, some excitement, some in the charts to give you guys a lot more value and give you guys a lot more resources to utilize, and also getting that VIP AAA chart area with John Dalton as well. He's got a great trading competition that he's doing right now too. Just pushing people along, different, there's so much great stuff in there. And with that being said, I love you all. I appreciate you. Every single buddy in the stream right now, hit that like button, hit that subscribe button, ding the bell, get involved here. I appreciate each and every one of you. Let's do that. I appreciate you. And with that, I'll see you in tomorrow's episode. Adios, muchachos. Thank you for coming. Thank you for always tuning in to bitlabacademy.com. Hit that like button, sucker.